Ja, herzlich willkommen zur neuen Ausgabe vom SE Talk und Sie sehen schon, ich habe heute einen Interviewpartner, Bradford Cooke von Endeavour Silver. Normalerweise treffen wir uns immer, wenn wir drüben sind, aber dieses Mal hat es ein Sonderupdate gegeben, weil der Aktienkurs die letzten 2 Wochen wirklich in die falsche Richtung gelaufen sind. Muss auch noch gleich einmal sagen, Conflict of Interest, ich bin Aktionär des Unternehmens und überlege jetzt auch, natürlich habe auch vorher nachgekauft und überlege jetzt noch einmal meine Position zu verbilligen, denn es stellt sich die Frage, ob wir noch einmal so billig an die Aktie rankommen. Brad, thank you to have time, and I must say, I say it in my German introduction, it was really a rough last 2 weeks, and I have a conflict of interest. I'm a shareholder. I bought more shares after our last interview, what we done in June or something. It works out that was not really the best time when we look now in the chart price. You're coming up with the numbers. A lot of companies coming up for it, not only you, also your competitor, for example, First Majestic coming up and the share price going up down dramatically. And when we look at your share price, I show it this now to my people, it looks really terrible. So it's going down from around 4 Canadian dollars or closely under $4 to 280. It's a terrible performance for the last 2 weeks. But was it really so terrible, your results? You're still working, or you're still in this transformation phase from last year decision to go a little bit on maintenance in some areas, or with handle this low silver price to this situation that you are now back on the growth strength. So what was the reason why the share price is going down more than 30%?
It's hard to answer that question, but I think it's because of putting out disappointing news in the summer doldrums. The market was not prepared to hold based on disappointing news, and it wasn't just Endeavour. It was First Majestic, it was Hecla, to a certain extent, some other junior silvers.
Let's come to the results. I show this now to my people. Your loss was 16,000, so it's nearly nothing.
Basically break even.
Break even
on an all-in basis.
But your EBITDA was still 3.7 million. But I think what a lot of people makes a little bit nervous was the silver production itself, and also the cash cost, the all-in cost. Is it right?
Right. So the trend from first quarter to second quarter was actually up for production, but that was still a disappointing quarter. It was behind our plan for the quarter. And the only mine of the 3 mines that was a disappointment is our Guanaceví mine, which has been giving us some troubles now for almost a year. Every time we fix a problem, something new comes up. So, for instance, in July, the electrical systems got hit by lightning and fried the electrical system at the mine, which meant that the pumps all failed, which meant that the lowest levels of the mine flooded. And that's not the first time this has happened. So how do you say that's something that we can fix? I mean, we repaired the electrical system, but will lightning strike twice? We hope not. So I think we're through most of the problems. Guanaceví is in recovery mode. I think the operations are getting better quarter on quarter. The problems are behind us, not in front of us. And we are in a transition. This is very much a transition year for Endeavour Silver, from 3 existing mines to building 2 to 3 new mines over the next 2 to 3 years. I mean, we're now forecasting to see production from our 4th mine at El Compas in the first quarter of next year. We should be breaking ground on the 5th mine, Terronera, in the first quarter of next year. So between now and then, I think there's actually a tremendous amount of good events, good news that are coming. And that sell-off in Endeavour shares in particular, I think, completely ignored the real game-changing news that's coming.
So, but where comes the big difference between the cash costs? The cash costs are $8.3 dollars per ounce and $20 for the all-in. So what is the $12 difference?
Right, and that headline all-in sustaining cost number of $20 per ounce was probably the sticker price shock that scared the market, spooked the market. We are still playing catch up on our sustainability spending. What does that mean? We stopped investing for the long term in 2014, 15, even into 16. And now we're playing catch up in order to extend the mine lives. So doing more exploration drilling to find resources, doing more mine development to turn them into reserves for next year's operations. We're playing catch up on that still in the first and second quarters. But, we did guide that would be the peak of our spending for the year, and that the spending also will decline Q3, Q4, and going forward. So it is very important for people to be aware that $20 number was a one-quarter event. It was not something that's going to be repeated.
So that's mean the spending into the ground by the existing mine drives your all-in cost, but the companies get the advantage in the future. Then this is the mine life for the future.
Completely. Right. So the difference between cash operating cost and all-in sustaining cost is very simply the cost of long-term investments to keep the mine going for years. Mm-hmm. Cash cost is a snapshot of what it looks like to just operate on a day-to-day basis. Mm-hmm. All-in cost is what it looks like to operate on a year-to-year-to-year basis.
Mm-hmm. Okay.
And our all-in sustaining costs last year were $12.50. Mm-hmm. So for them to go to 20 in one quarter, of course that's a shock, but that doesn't mean that's where they're going to stay. I had one fund manager, actually had a shareholder, ask me if that meant that Endeavour would no longer be profitable until the silver price was higher than $20. And I said, no, you completely missed the point. The point is that we are playing catch up on our sustainability spending. The peak was the second quarter. Now those costs will decline going forward, and we obviously, without any new mines, we would expect to see our all-in sustaining costs come back down to our guidance of $15, $16 this year. And I think in future years, especially with the new mines, we're talking $8, $10, $12 all-in sustaining costs. A big difference from Q2.
Absolutely. You mean your overall all-in cost for 2017 is $15, $16? So it's mean that the all-in cost for the next third and fourth quarter must be much, much lower than now.
Oh yes, very much so.
Okay, very important. Do you see, and when I'm always see a kind of correction, do you see that somebody play a short game on your stock?
No, but I think what we also missed until after the fact is that in the U.S. we're heavily owned by retail investors and traders, and they heavily borrow on margin. At $2.50 share price U.S., they can no longer borrow on margin and they have to cover. And so if you recall, that last step down from about 280 to 220 U.S. was a margin call.
Mm-hmm. Okay.
So now the weak hands are cleaned out of the stock, and it'll take some time to rebuild. But I think there's a tremendous amount of confidence here in our group that the company is doing all the right things to see significantly higher share prices.
So that's new for me. So under 250, you cannot put it on the margin account. So you cannot buy it by. In Europe, we are not really buying stocks on margin. So especially not in Austria, where I'm from, it's not possible that the bank give you, and you are not allowed to every stock that you can put margin on it. So it's not possible. Okay, that's new. So that is the main reason. When you're falling under 250, then you get a margin call. The people cannot buy, must sell it, their stock, and then okay.
Basically, half of the decline last week was because of the margin calls, and it's not like we actively go and look for investors like that. They find us, not the other way around. But they're weekends, like they're there for a few hours or a few days or a few weeks, and they got spooked out of the market last week. Fine. Hopefully the people who bought their shares are much more long-term investors.
Okay. Guidance. To summarize the guidance for 2017. So what is now the guidance? What you think on all-in cost? You say to $50, $60, $70 around. That's the first one. What is you think are also your cash costs coming down, and how it looks like?
Yeah, cash costs haven't moved much off of the $6, $7, $8 range. They peaked at $8.50 in the second quarter. They'll come back down a little bit for the rest of the year, because on a cash basis, on a day-to-day basis, not much has changed. The one mine was doing poorly. Now that it's doing better, but the impact on the overall cash costs of the company wasn't that great. The difference was the all-in sustaining costs. And we will see those coming down significantly for the rest of the year and into the future. I'd like to remind your viewers that with the two new mines, we already published economic studies on El Compass showing all-in costs of less than $10 per ounce of silver produced. In Terronera, it's even better, less than $5 per ounce of silver produced, all in, when we build and produce at Terronera.
What you must spend in the third and fourth quarter to bring this up, these two mines? Only for this year?
So the spending on Terronera is quite low. I think a combination of exploration and engineering and pre-development is something in the order of $2 million for the second half of the year. El Compass, actually, there's more of a spend going on there. We're using our cash and our cash flow to build El Compass, and the mine development will get going here in the third quarter. It has gotten going in the third quarter. It's already underway. So we'll spend about half of the $10 million budget through Q3 and Q4, and the other half will be spent in Q1.
Okay. So, but is in the first quarter the first production, or also the commerce of production in the first quarter 2018?
No, we expect to both commission the plant and achieve commercial production in Q1 at El Compass.
Okay, so it goes really quick.
Yeah, it goes very quick because the mine is permitted, the plant is built. We're really for refurbishing the plant and making it more efficient, and we're developing the mine to fill the plant. So there's an exercise really in mine development. We'll be building a stockpile of high-grade ore starting in the fourth quarter. We'll start feeding the plant in the first quarter, and it'll achieve commercial production, hopefully by the end of the first quarter.
What do you expect El Compass on production next year?
Well, it's a small mine, so just somewhere around 1 million ounces of silver equivalent production. But it's a scalable mine. What I mean by that is that the nameplate capacity of the plant is actually 2.5 times larger than the current mine plan. So we're proposing to run at 200 tons per day of high grade. That's 1 million ounces a year equivalents. And the plant has a nameplate capacity of 500 tons per day. So as soon as we can find more feed, more ore, then we'll immediately look to a plant expansion. And so El Compass is a scalable project.
Coming to Terronera, that's your planned fifth production. So, but this planned for 2019, or?
Yeah, so Terronera breaking ground in the first quarter of 2018 means that we'll see production in mid to late 2019.
And what the cost for the capex for this to build up?
So capex on Terronera is bigger. It's $70 million US, and we will put in place a $50 million debt facility to take care of the bulk of that. The rest will come from our cash and our cash flow. And Terronera, once it's
15 or 50?
No, 50.
50. Okay.
Because the total capex is 70.
Yeah, but you have around 70 million in cash.
Right now we have 72 million of working capital. That's net of about 4 million of short-term debt, and we're about to take on 50 million of more debt so that we can build Terronera.
Okay. One of my last questions, and this is always the question when I talk with you, is the silver price. We see a silver price that's underperforming gold price. This is a little bit, it scares me a little bit. Then the fundamentals are better by silver than by gold. So what's really happened?
Well, I think what the silver-gold ratio is telling us is that we might be heading into a very difficult time in the global stock markets. And so what they're telling us is the risk of a liquidity crisis, the risk of a sell-off in the stock markets and a rush to cash or US dollar instruments or euro instruments. And normally, gold and silver stocks do nothing or even tick down during such an event. But then very quickly, such as 2008, 2009, they turn around and lead as a sector, they lead performance for years following such a crisis. So I think that's what the ratio is telling us. A rising ratio is telling us there's greater nervousness in the markets. And then once we see that, whatever that event is, if it's a 10% correction, so be it. If it's more, some people think it's more. I don't know, but that's I think what's needed is a little clean out in the stock market, and then off we go. We are still in a very low interest rate environment, even though the U.S. Fed and other banks are guiding higher interest rates. At what pace can they continue when the economy is not performing in the same way? And the U.S. economy is crawling back from the basement, but it's not growing as fast as the interest rates are growing. So at some point, I think in September, the Fed is going to say, no, we're not ready yet. And I think that will spook the market. So that bad for stocks, good for gold.
But I'm a little bit, makes me, especially when I look at the gold stock, is the gold is close to 1,300, but the gold stocks are not really running. And it looks like for me that a lot of people are losing the interest in the precious metal market, especially in the stock market.
Well, the perception in North America is dominated by the U.S. stocks. And the U.S. stocks have been on a tear. Yeah. I mean, they've just been, there's nowhere else to put your cash, literally. In North America, there's nowhere else to put your cash. So people are piling into that market. It's very concerning for market experts, people who are experienced in these markets. So it's a concern that nobody wants to see people lose money, but this market is overdone. This stock market in North America is overdone. And it has to take a break. And that can only be good for real assets. So gold and silver, I think, will do their usual and significantly outperform after such an event. And I think that event is coming in September, October.
I think it's a good end word. I hope it will come soon. Everybody
People own these stocks and these metals for a reason. They are precious by definition. And even though sometimes the general populace forgets that these stocks and these metals are precious, they are reminded of that after other things lose value.
Brett, thank you for your time. Thank you for the update. It was really a rough week or last 2 weeks, but hopefully the next few weeks are going much, much better. And then next time in October, we'll see us again when I'm back in Vancouver. And I'm quite sure you're also coming to Munich to the Edelmetallmesse.
Certainly, I'm going to be in Europe for at least 1 week. I'm not sure if I'll make it to Edelmesse, but if I don't, then certainly one of my associates will. Hope to see you there. By the way, Endeavour Silver, we have a really good sound business. It's going in the right direction. Stay tuned.
Okay, thank you. Thank you for the update. Ja, das war ein Update von Bradford Cooke, Endeavour Silver. Ja, die Zahlen sind nicht berauschend. Grund ist vor allem die All-In-Cost. Die sind mit $20,46 durch die Decke gegangen. Er hat erklärt, warum durch die Decke gegangen ist. Weil sie 2014, 2015, 2016 zu wenig investiert haben in die Minen. Jetzt müssen sie das nachholen, damit die Minen, die Lebensdauer der Mine erweitert wird und damit sie eben genug Material haben, um die ganzen Mühlen zu füttern mit Material. Das war der Grund, warum die All-In-Kosten nach oben gegangen ist. Er sagt, der Peak war jetzt im Q2. Er erwartet für 2017 durchschnittlich 15 bis 16, 17 Dollar All-In-Kosten. Das ist natürlich dann das, was der Markt erhofft. Das heißt, die Kosten im dritten, vierten Quartal müssen auch deutlich niedriger sein. Dann wird eigentlich schaut die Sache schon wieder ganz anders aus. Aber was ganz wichtig war, und das habe ich nicht gewusst, in Amerika gibt es ein Law, dass ab 2,50 diese nicht mehr marginfähig sind, diese Wertpapiere. Nachdem der Aktienkurs unter 2,50 US-Dollar gefallen ist, hat es sozusagen einen Margin Call gegeben und die Leute haben ihre Aktien verkaufen müssen und das hat den Kurssturz eigentlich erst richtig, den letzten, ausgelöst. Und das waren fast 20% dieses Rückganges. Und das passiert jetzt natürlich nicht mehr, weil wir sind drunter, also kann das nicht mehr passieren. Und von daher ist das eigentlich eine ganz spannende Sache. Die vierte Mine wird gerade aufgebaut, kommt im ersten Quartal 2018 in Produktion mit niedrigen Produktionskosten unter 10 Dollar. Die fünfte Mine soll 2019 reinkommen mit unter 5 Dollar Produktionskosten. Und dann schaut die Sache natürlich schon wieder ganz, ganz anders aus. Und ja, wenn der Silberpreis natürlich weiter nach oben geht, er sagt, die normalen Aktien sind überbewertet, dadurch schaut keiner mehr auf diese Goldaktien, Silberaktien und das soll sich aber jetzt ändern, glaubt er. Und ich bin mir da nicht hundertprozentig sicher, ich würde da eher sagen, der allgemeine Markt ist durchaus kann durchaus auf dem Level bleiben oder sogar steigen, aber ich glaube, dass das Interesse in den Gold- und Silberstocks dramatisch zunehmen wird. Ja, es war ein gutes Update, war ein wichtiges Update, habe wieder was Neues dazugelernt und ich hoffe, Ihnen geht es genauso. Und wie gesagt, ich überlege, weitere Aktien zu kaufen und ich glaube, der Preis ist jetzt relativ interessant. Wie gesagt, ich habe schon Aktien, musste eigentlich verbilligen, weil ich bin jetzt natürlich auch ziemlich unter Wasser und das gefällt mir natürlich weniger gut. Ja, das war's von mir. Endeavour CEO Bradford Cooke am 14. August 2017. Tschüss und Baba. Thank you, Brad.
Okay, thanks, Joe. Appreciate it.